MID dropped 1.09% to $62.41, and we are breaking down exactly what is happening and what it means for your portfolio. But first, a quick disclaimer. Quick disclaimer. This is for educational purposes only, not financial advice. Always do your own research before investing. Now, let's get into it. As we analyze the current market landscape, the S&P 500 is trading at 6,706.97, with a decrease of 1.02%, indicating a gap down. This movement is reflective of the broader market sentiment, where the Dow Jones is also down by 1.04% to 46,923.3. The exact catalyst for this decline is unclear, but it's evident that investors are cautiously navigating the market. The VIX Fear Index at 26.05 suggests elevated caution, which often precedes significant market movements. Given this context, investors are keenly watching the 10-year note yield, which is at 0.424%, for any signs of economic health and stability. With no consensus target available for the S&P 500, investors are looking at the current levels to make informed decisions. Today's economic events, including the release of PPI/CPI data at 8:30 Eastern Time and the Fed speech/FOMC at 10 o'clock Eastern Time, are highly anticipated. These events have the potential to significantly impact the market, especially considering the current yield on the 2-year note is 0.384%. The market is also watching the RBI policy update, which could provide further insight into global economic trends. The reaction of the Nasdaq, currently at 22,441.42 with a decrease of 1.21%, will be particularly interesting given its sensitivity to economic policy and data releases. As the market digests these events, the focus will be on how they influence the 30-year bond yield, which is currently at 0.487%, and what this means for long-term investment strategies. The current market situation is also reflected in the movement of various sectors. The tech sector, a significant component of the Nasdaq, is leading the index movement. Stocks like OXY are gaining, with OXY up by 5.54% to $58.66, partly due to the upgrade by Piper Sandler. The Hang Seng's slight decrease of 0.7% to 25,716.96 indicate a cautious approach in Asian markets. The DAX's minimal change of minus 0.21% to 23,589.65 suggests a more stable European market. The interplay between these global indices and the U.S. market, particularly the S&P 500 futures at 6,701.75, will be crucial in determining the direction of the market. With the CAC 40 down by 0.71% to 7,984.44, investors are closely watching for any signs of a broader market downturn. For investors, the key is to navigate this market landscape effectively. The Shanghai Index, relatively stable at 4,129.1 with a decrease of 0.1%, presents an interesting case for investment in emerging markets. Meanwhile, the FTSE 100's decrease of 0.47% to 10,305.15 indicates a cautious approach in the UK. The strategy for many will involve watching the 1-month T-bill yield, currently at 0.361%, for short-term investment insights. However, the focus on the 10-year note yield remains paramount for understanding the broader economic picture and making informed investment decisions. With the opening range trade plan indicating a bearish stance for the S&P 500, investors are advised to approach the market with caution, considering all available data points, such as the Nasdaq futures at 24,655.25. In conclusion, the current market situation is complex with various factors at play. The decrease in the Dow Jones to 46,923.3 and the Nasdaq to 22,441.42 underscores the cautious mood among investors. The S&P 500 at 6,706.97 will be closely watched for any signs of market recovery or further decline. The VIX Fear Index, elevated at 26.05, suggests that investors are preparing for potential market volatility. As the market looks ahead to future economic events and data releases, the key will be to balance risk and opportunity. For ARKK, the focus will be on how it navigates this challenging market environment, considering its investment strategy and the broader tech sector trends. With data unavailable for certain market metrics, investors must rely on available numbers, such as the yield on the 30-year bond, to make strategic decisions. As we delve into the mid-market analysis, it's essential to consider the performance of key players. The S&P 500 futures are currently at 6,701.75, indicating a gap down. This trend is also reflected in the Nasdaq futures, which are at 24,655.25. The exact catalyst is unclear, but the market seems to be reacting to the current economic conditions. The Dow Jones is at 46,923.3, and the Nikkei 225 is at 54,452.96, both experiencing a gap down. The Hang Seng is at 25,716.76, and the Shanghai is at 4,129.1, with the latter being relatively flat. The ARKK ticker is an essential component of this analysis, as it provides insight into the mid-market's growth prospects. The VIX Fear Index is currently at 26.05, indicating elevated caution. This level of volatility can significantly impact the mid-market as investors become more risk-averse. The ARKK ticker can provide valuable insights into the mid-market's ability to navigate this volatility. 0.07 are also worth considering in this context. No consensus target is available for the ARKK ticker, but its performance will be closely watched in the coming days. Before we wrap up, here is your complete market snapshot for today. Today's top gainers include OXY up 5.54%, Chevron up 3.27%, NEO up 3.02%, CRM up 3.01%, PLTR up 2.19%. On the losing side, we have MID down 1.09%, GME down 0.2%, ABVI down 0.4%, V down 0.45%, Netflix down 0.46%, BRKB down 0.46%. The VIX Fear Index is at 26.05, signaling elevated, caution advised. Watch out for PPI/CPI data at 8:30 Eastern Time today. On Carat GSBC, watch for a break above 6,809.44, targeting 6,809.44. Stop loss below 6,711.95. This summary card shows you indices, top movers, the VIX Fear Gauge, support and resistance levels, and the economic calendar all in one place. Use this to plan your trades for the session. As always, manage your risk carefully. Never trade more than you can afford to lose. If you found this analysis helpful, hit that subscribe button and the bell icon so you never miss our daily market updates. See you in the next one. That's a wrap on today's analysis. If you found this breakdown valuable, please hit the subscribe button and turn on notifications so you never miss our daily market coverage. Now here's my question for you. Drop in the comments right now. Which stock from today's analysis are you watching most closely, and are you buying, holding, or staying on the sidelines? We read every single comment and reply to as many as we can. Like this video if it helped, share it with a fellow trader, and we will see you in the next one. Stay informed and trade smart.